Hi, I'm Tom Lydon with ETF Trends here in Hollywood, Florida at the Inside ETF conference here with Mannik Dhillon, who's president of VictoryShares and Solutions for Victory Capital. Great seeing you, Mannik.
Great seeing you as always, Tom.
So let's talk about 2019. As you're talking to advisors here at this conference, what are some key things they need to be thinking about?
One of the most important things is diversification. Because we think about all the risk factors that we have out there, trade wars, government shutdowns, slowing growth, you don't know which factors are necessarily going to work or which securities are going to work.
Yeah.
So having a diversified approach to your stocks and to the factors you're exposed to is very important.
So there's a lot of advisors, we've seen this through ETF flows, who've kind of taken a risk-off approach as we've gone into 2019. Might we be in a late cycle of this economic stage, let's say, and what does that mean, and what could advisors do to stay in the market but also be a little bit more protective?
So one of the great things is minimum volatility as an investment. So with minimum volatility, what happens is you can dampen your downside capture. However, traditional minimum volatility and low vol, you give up a lot of up capture. So what happens if 2019 and even 2020 turns out to be up years? You've given up your returns. Well, adding a multi-factor approach on the front end to that minimum volatility investment is a great way to try to get more up capture if the market doesn't decline in a significant way, but also protect potentially in a drawdown.
So getting specific there, it's not that you're having to make the shifts among the allocations of ETFs. It's in fact inherent within that ETF structure, correct?
It is. And so what the nice thing about that is it's already designed, it's objective, and it's rules-based. You know what it's going to do. Doing it yourself by going risk on or risk off is very difficult from a timing perspective.
Yeah. So talk about a couple of the products that advisors can consider that actually do that for them.
Sure. So one of our products is based on the Nasdaq Victory Multifactor Min-Vol Index. What it does is say, let's start with a great set of companies that have a potential to outperform because they have exposure to great factors that we know generate return, and then apply a minimum volatility process to it. So that way you can hope to get more up capture, similar down capture, and take that risk budget and go elsewhere.
Yeah.
You know, that way you don't have to sacrifice your return in case you're wrong. The other is our volatility weighted suite of products. And that essentially says, don't invest in a concentrated market like cap weighted products, but diversify across those companies using risk instead of something equally or by size.
Yeah. So there's certain, when you put the stocks through the sausage grinder, some make it, some don't. Right. Weighting changes, and you apply that same strategy to different asset classes. Is that correct?
Yeah, absolutely. And that's the key to it. Right?
Yeah, absolutely. Well, good. Great seeing you, Mannik. As always, I get a lot from you, and most importantly, this is the year of strategies I think that all advisors need to be thinking about.
Absolutely. It was great seeing you.
Great seeing you.